Nasdaq, coming to you live from Consensus by CoinDesk in Austin, Texas. Joining me for this segment, we have John Nahas, who's the Vice President of Business Development at Ava Labs. We're going to discuss subnets and how they will be used by blue chip global institutions and bring them into the world of crypto and Web3. John, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
Let's talk about the markets overall first.
Sure.
Current volatility in the markets, not just equities and bonds, of course, it's hit the crypto space as well. And we see investors are de-risking. Do you think that Bitcoin is here to stay as an asset class, or this might scare investors away?
I think Bitcoin has proven itself resilient over multiple market cycles, whether it's this year, 2018. I mean, there's been significant percentage drawdowns, but it's still sitting pretty steady around 28,000, 29,000, which is compared to the last time 3,000, the time before that a few $100s. So despite these significant drawdowns, we're still seeing it increase over time. So the easiest thing to do is to zoom out and look at the long-term trajectory. And with that, the rest of the crypto market is maturing as well with it.
And what's interesting with that is each bear cycle is when we have seen the biggest protocols, the use cases, the really unique projects come to the forefront. Can we expect the same for this cycle?
I mean, I would expect no less. The amount of talent that's flocking into Web3 from traditional finance, from enterprise, from many different fields is tremendous. I see it on a daily basis as we grow out our team and as other teams grow out as well. And Avalanche itself was born out of the last bear market. We came online about a year and a half ago or so, but the work was done way before that to bring us here. So, you know, the markets have a propensity to kind of grow real fast and people get excited. And with that excitement, things get a little out of hand sometimes, right? But it's during these times where people pull back, where the real quality projects really progress, they mature, good teams and good builders, that people that are here for the long term are here to stay, build some of the best products. And then when the market picks back up, they're the ones that win.
Yeah, I mean, look at the microcosm where we are right now. I think over 15,000 people at Consensus. I remember the first time I covered it in 2018, we were in a hotel in Midtown Manhattan, and like we had a few media companies just down one hallway in the lobby. Now, I mean, we're in the Austin Convention Center, and look at the different types of companies that are here. I mean, we weren't talking about Meta and Web3 4 years ago, and just look how big it has boomed since then.
Well, absolutely, right? And you see kind of the diversity here, right? So it's everything from traditional financial institutions, the big banks, to your traditional enterprise giants, for whether it be Amazon or Microsoft or whoever it may be, they're here or have presence here. The top tier consulting firms are here, right? As well as the crypto native people, the NFT projects and the DeFi protocols, and the exchanges and the wallet providers. So it's really the whole spectrum of what exists outside of Web3. You know, whether it be Web2 companies or traditional companies, really entering into this space and showing a lot of interest.
Yeah, they are. It's no longer like an us versus them story, but marrying tech and scalability.
Exactly, it's how they join us.
Right. Explain to me what subnets are and the types of applications it can be used for.
Absolutely. So a quick step back, Avalanche as itself is a layer 1 blockchain, of course. We have three chains that run the main network, of which one is our platform chain, right? So that's where a validation and delegation occurs. But if you are a validator on the Avalanche network, you can create a subnet, or what we call a subnet. And that's pretty much a customized chain or an app-specific chain, right? So if you take a step back and look at kind of the work that enterprise chains did, or the current existing blockchains that exist, they're single chains that are supposed to fit a million different applications, ranging from enterprise to traditional finance, to gaming, to NFTs, to DeFi. But the truth of the matter is a single chain should not or cannot hold all these things together. Because at the end of the day, if you're a developer of a game, you want to focus on developing a game. You don't want to worry about a distributed system and a blockchain. You want to build a game. And you need a blockchain that fits your game. You're not trying to change your game to fit a blockchain. So a subnet is an app-specific or a business-specific blockchain that could be deployed on Avalanche and has interoperability with the rest of the chain. So if you're an enterprise, if you're a traditional financial institution, you have KYC AML, you have accreditation requirements. You can restrict participation in a subnet based on compliance, based on location, based on whatever it is that the parameters that you as a builder really need in order to achieve the kind of product you want.
So how do you see subnets being used by blue chip companies to bring them into the world of crypto and Web3?
Absolutely. So first, on the traditional finance side, right, as I alluded to, if you're a financial institution and you want to deploy a tokenized asset that might need accreditation, you could fence your subnet or with accreditation or KYC, or if you're a qualified institutional buyer, you could create kind of the safeguards or the compliance safeguards to allow who you want in and out of that system. If you're a payments provider, you want to create a payments chain, a chain specific to payments, you can have KYC and AML be the safeguard in and out. If you're, like I mentioned, a game developer, your focus is on bringing as many people into your game as possible. You can create a game that has infinitely low fees or your own token. So every developer can build the project they want with the token they want and the fee structure they want based on whatever product it is that they're deploying.
Interesting. All right, John, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.